Good morning, everybody. It's Wednesday, April 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I will be sure to get to it during the show. Overnight markets here at May corn up 3 3/4 at 485. May soybeans were up 2.5 at 1038.5. May Chicago wheat was up 6.5 at 548.5. This morning we had retail sales were out. Up 1.4% in March is better than expected. They were looking for a number closer to 1.2%, and then that was sharply higher than February's numbers. February's up 0.2%. So good data there in the outside markets. We've since turned a little bit lower here in the Dow. It's down 148 here this morning. Yesterday, we got NOPA crush, fell below estimates, 194.551. They were looking for a number closer to 197.6. And oil stocks were down 19% from year ago levels at 1.5 billion pounds. So pretty sharp reduction there from a year ago. Good morning, guys. No export sales announcements here this morning. We do continue to see corn quietly rallying here. Maybe just a few thoughts, Dustin, to kick us off this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Lower dollar, higher commodity prices. This is the highest price DH26 corn has traded since the June 2024 timeframe. So I think that's pretty telling. We have a lot of corn acres intended for this year, but we talked about this a lot. It does feel like we're at unsustainably low prices. We're really not looking at much money being made at this price, even for DH25, even though this is a relatively good price compared to recent history. And, the big question for sustainability is, do cost structures come down or does output start coming up? When you start seeing rising flat price where spreads are staying flat, like DH25 and DH26 are both rising at the same pace in this example, perhaps it's just a sign that the market's trying to return to normalcy, that eventually it's going to be a problem for production if you don't start showing both sides, both the producer and the consumer, being able to make money.
Yeah, very good. Justin, what's your thoughts yesterday on NOPA's numbers?
Yeah, I mean, we had, second month in a row where it came in, the month before was sharply lower than expected. This was down again, so oil stocks are tight. Yes, we've seen crush margins. They still look pretty good, but they've definitely come down. So yeah, I don't know. Meal, soybean meal has acted really, really weak. Had a recent bounce, but it's at cheap prices. We have we should have good feeding margins out there with where the livestock prices are at. So I think we have pretty good demand. I mean, obviously meal just slowed a little bit. So I mean, we're not getting the export pace out there. Argentina's probably coming back online. Their crush has been picking up. So I think the export market, they've been getting a bigger share of that as they've come more back online. So, still really, really good numbers. It's just been kind of disappointing, but you saw soybean oil kind of lead the rally here. Oil share getting strong again. You're at $1.4 billion. So you're already tight there. I think that's just one of those markets that's gonna be really interesting, which I've talked about quite a few times on the show, where what happens with tariffs, right? 3-4 billion pounds, 3 to 4 billion pounds of used cooking oil coming in every year to satisfy biodiesel demand. It's a massive number, right? We're talking about, compare that to 1.4 billion carryout, right? So we're using 3x the carryout in imports from China. You start putting, massive tariffs or change policy combined with whatever's going to happen with renewable, policy as well. You just got too cheap. You got soybean oil down to prices where you were the cheapest oil in the world on an export basis. And we were basically, when we started building all these plants, kind of thought was like we may never export oil again, because we're going to need every single pound of oil that we make. And then obviously people found loopholes and brought Chinese used cooking oil in, and stepped on our own foot. Classic move by us. But if you start changing that, I mean, we're half price. We're half price of what the highs were when we were really using it before we started bringing all the stuff in. So, I think there's just some friendly things demand wise. Meal, when you crush that much, like we had to find a way to feed that much extra meal, and we got away with it for a period of time with exporting it because Argentina, fell into some issues, right? So you look at like European meal imports are up, and we were able to kind of export for months and months and really more like years. A lot of export business for us, which helped, right? Helped keep meal kind of stable. Now the question is going to be if we can't export it, right? How are we going to get rid of it? And that's kind of meals seeing at multi-year lows, really just kind of it's really good. I mean, I like this because it keeps it cheap feed on meal, right? So even if corn prices got expensive, you got cheap meal, so it kind of helps with that, that total, cost of the ration. So it should, help with profitability in the animal sector. At the same time, we can use soybean oil and keep crushing more beans. So obviously that's, again, continued what we've talked about, just trying to get more on the crush side of the balance sheet for soybeans and less on the export, especially since so much of it goes to China, that we're so dependent on them taking it. So yeah, I think that trend just continues. Obviously, it'd be nice to get some 3 and 5 year outlooks for renewable diesel, right? So that investment can continue and infrastructure and things like that, not just have these 1 or 2 year little bills that come out that people can't react or plan. We need to have some longer term looking things. We were talking about yesterday, I think after the close, but like when Bush came out with first RFS, right? It was a ramp up. There was a clear path of 5 or 6 years. So it gave investors and companies confidence to build, knowing what that demand was going to look like. I'm hoping that whatever kind of deals or things that we do get something similar, so to give companies, whether it's ag or other, time to ramp up and feel confident about investing in what it's going to look like, more than a year from now.
Well, and you kind of get that sense from the rhetoric out of the White House too, in their continued discussions on farm payments, right? Like they want a solution to do away with those in some capacity. To your point, Justin, to get on a better path where the farmer can be sustainable, in their business.
Yeah, I sure hope so. I mean, we consume so much in this country that we should be able to support that. And I broken record here, but I think from a strategic standpoint, it makes sense to do all these things where you're using a ton of this, our corn, soybeans, sorghum, wheat, all those things domestically. And if you ever ran into a multi-year drought, some kind of a problem, you can always cut those off in the short run, right? And have billions of bushels that can be used for other purposes. So I think strategically it makes a really, really good argument too from a food security standpoint. And then when you don't need it, you have a lot of energy that you're making from that. So I think it's a win-win.
We've been talking a lot about China and their dependence on Brazil, or and shifting a lot of business. And I was reading this morning this story with COFCO, this new terminal that's expected to be online later this year with 14 million tons of capacity, and the big hiring that's going on. So I think they're making it very clear that we're deal or no deal. It's kind of like we're going to take a back seat in some capacity here.
Yeah, and this trend has been going on for 20 years. I mean, China's been notorious for pumping money into countries and then having them in debt to them, right? I mean, all over Africa, Brazil's been happening for a long time. I think that's some of the, kind of push by getting control of the Panama Canal for us too. So you hope that, obviously cooler heads prevail, but there's definitely strategic plays happening all over now. I mean, between that, like banning NVIDIA chips to China, I mean, this is just kind of, we obviously don't like each other very much. And if we can't figure out something amicable, there's gonna be more and more protectionism in place.
Yeah. Ben, what's on your mind this morning?
I think Dustin's comments resonate, and the sustainability of the long-term outlook when you have to have a happy consumer and a happy producer. And it just makes me think that, if you're going to be looking at things to do or have things like that, you've got to leave something with an open mind to the possibilities that exist in these markets should something start to go haywire. We have a really wet weekend forecast across the eastern corn belt, particularly the southern half of it, including a lot of Illinois, where I think there's been a fair amount of planning. And it doesn't take a lot to kind of change the narrative this time of year. So, cautiously optimistic. I fielded some calls from people that want to know why we were down the last 2 days. And, we had a pretty impressive run up in the face of some serious outside market issues. And I think you just have to be really open-minded about where we're at, both economically with the producer and where we're at on the calendar. And there's a lot of money sitting on the sidelines. So I think just going at it with kind of a really humble opinion of what this market can or can't do is pretty important.
Well, very good. Well, I think that if anybody else had any other things on their mind here this morning, it kind of touches all our bases. A couple things to note. We'll have weekly export sales out tomorrow morning, 7:30 Central. We'll take a look there, visit about those in the war room. Also, it'll be Fun Fact Thursday this week because Friday the markets are closed and we will not have war room for Good Friday holiday for this week. So then the markets will reopen Sunday night. So we'll be closed Friday, reopen Sunday night, 7:00 Central is going to be the schedule here for this week. So with that, we'll close for the morning. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. Keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.